Welcome back to Teshkid Effects for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8863 mark, and here on TradingView the market is up by 0.9%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark in a movement that I've been terming as a higher Elliott wave count 1 to the upside. And after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $0.32 mark in a movement that I've been terming as a higher Elliott wave count 2. And after seeing the formation of a higher Elliott wave count 2, whatever we expect next is an impulsive movement taking us maybe to an all-time high over here in the formation of that wave 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 and sketching out a minimum target area to the upside in the formation of that wave 3, using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5.06 mark, and that is the minimum that I would expect that wave 3 to the upside to do before we see a wave 4 and then continue pushing even higher in the formation of that wave 5. And that is my long-term scenario that I'm expecting to play out here on the Polygon Matic chart. And because a third wave to the upside is an impulsive wave, we also expect to see fractal waves in formation within that wave 3 to the upside, and that is what I think is happening here on the 4-hour chart. So jumping to the 4-hour chart for further analysis. Here on the 4-hour chart, you can see I have this Elliott wave structure in blue, where I believe this is a fractal wave in formation within that higher Elliott wave count 3, and that is because of its impulsive nature. And in the formation of this Elliott wave structure in blue, we have completed the formation of that first wave to the upside, and that is after seeing this Elliott wave structure in yellow over here, having that wave 5 completing the formation of that higher Elliott wave count 1. And I have this Elliott wave structure here in yellow because a first wave to the upside is also an impulsive wave, and we also expect to see fractal waves in formation within that first wave to the upside, having the wave 5 completing the formation of that higher Elliott wave count 1. And now my primary scenario is that we in the formation of this higher Elliott wave count 2, which is a corrective wave, and because of its corrective nature, we also expect to see an ABC corrective structure in formation within this higher Elliott wave count 2. And before I get into the short-term scenarios that I expect basing it on the ABC corrective structure, you can see over here we have a channel that we have been trading within, which has been well respected, giving us more than 3 touch points, and we are yet to see a breakout out of the channel either to the upper side or to the lower side. We are yet to see that breakout. And getting back to the ABC corrective structure, there are two ways we can have that ABC corrective structure, and that is what is going to give me my short-term scenarios. And the very first way we can have that ABC corrective structure is having this as a massive wave A. Then right now I'm expecting the formation of that wave B before we continue pushing even low in the formation of that wave C, which should fully maximize the formation of that higher Elliott wave count 2. And getting a little bit into the details of the formation of this wave B, which is right here, and sketch out a minimum target area to the upside in the formation of that wave B using the Fibonacci's, connecting them from the high of that wave A to the low of that wave A. That gives me a minimum retracement area to the upside in the formation of that wave B between the fib level 0.618 and the fib level 0.382. And I can mark that target area here on the charts, which perfectly lies between the $0.96 mark and the $1.09 mark, and that is the minimum that I'm expecting this wave B to the upside to do. And once we get into that target area, then we can say we have completed the formation of that wave B. Then we can expect an impulsive movement to the lower side in the formation of that wave C. And for that to happen and fully maximize the formation of this wave B, we need to manage to break out of the channel maybe to the upper side, and also manage to break above the 20-day MA. And once that happens, I will also expect Polygon Matic to manage to break above the key area of resistance at around the $0.95 mark, see a successful retest of that key area of resistance. And once that happens, then we can fully maximize this red target area in the formation of that wave B. And Then from there we can expect an impulsive movement to the lower side in the formation of that wave C, and also lose the key area of support at around the $0.78 mark. And there are also key areas on the Fibonacci's that we need to continue to hold for us to say that this is still a valid wave B to the upside. And using the Fibonacci's once more, connecting them from the low down there to the high at around the $0.94 mark, that gives me a minimum retracement area in this movement right here between the Fib level 0.382 and the Fib level 0.618, and I can mark that target area also, which perfectly lies between the $0.88 mark and the $0.83 mark. In case we lose that target area over here, then that is when the other possible scenario of having that ABC corrective structure will be playing out. But for now, as long as we continue holding above the $0.88 mark and the $0.83 mark, then there are chances of seeing a bit of a bounce to fully maximize the formation of that wave B before we see the wave C. And having the other ABC corrective structure over here, which can only happen in case we lose this target area right here between the $0.88 mark and the $0.83 mark, we can have a different ABC count over here, having this as the wave A. Then we saw the wave B making a peak at around the $1.17 mark. Then once we lose the target area, then we can expect this to be a straight sell-off in the formation of that wave C to fully maximize the formation of that wave 2 to the lower side. And for that to happen, we need to lose that target area and also lose the key area of support at around the $0.78 mark. Also see a successful retest once we lose that target area and continue pushing even lower to fully maximize the formation of that wave C. So those are my two possible scenarios that can play out here on the Polygon Matic chart, having those two ABC corrective structures that can play out, and we need to continue holding above the $0.88 mark and the $0.83 mark so that we can fully maximize the formation of this wave B in this red target area right here. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 42 mark, meaning we have massive room for us to support any movements to the upside, and also massive room for us to support any movements to the lower side in case we lose the target area between the $0.88 mark and the $0.83 mark. Also taking a look at the MACD, here on the MACD we have printed a bearish cross, but we are seeing a bit of a decrease in the selling momentum. So let's be patient and see how that plays out, and I'll keep you updated.